They said bills. before,
Bills, bills, bills.
before I go to bills, though, before I go to bills, the action banks. There we go. There you go. AG said it. It goes into the bank. So this is what happens, right? And this is why, the information I'm teaching you right now is so valuable. Let's say, you're making let's say you're making $10,000 a month, right? Whatever. I'm just going to put 10,000, right? You're going to get your money, it's going to direct deposit into the bank. And what happens is the bank takes your 10,000 and they go put it in life insurance, right? They go take your money and go put it in life insurance, right? Different types of life insurance. I specifically work with the IUL. And let's say, they're going to get 10% average like interest on your money. Like, think about that. This is your money that you put in their bank to go and they're getting 10%, right? And now you come and be like, yo, I want to go get a car. I want to get a house. Matter of fact, I want to go buy me a storage facility, right? I want to go buy me a storage. You're going to go borrow money from the bank, but the bank is going to take the money from their life insurance policy and then lend it to you, right? So they're literally taking your money that you gave them, they invested it, and then they go borrow against the life insurance, like here, and they lend it out to you, and they're going to charge you, like right now, SBA rates is high. I'm not even going to hold you on that. SBA rate is like 11%. So they might charge you 11% for the SBA, right? But if you go and get a vehicle, they might charge you 20% on the vehicle, right? 10% on a house. Like, it's like the interest rate is crazy. But what I'm sharing with you is the bigger picture is you're now paying, let's just say you're now paying 30% interest on the money that you gave them. Does that make sense? What part of the game is that, y'all? Like, does that make sense? What part of the game is that where I go and spend my hard-earned money? I'm working every single week, and now I go and give the banks my money, and the bank goes put it in life insurance and borrow against it, and then charge me 30% of my money. So really, if you do the 30% plus the 10% that they're making on the insurance, they're making 40% on your own money. This is crazy. But, after tonight, it's going to be something different. I'm going to show y'all. So instead, this is what we do, right? This is exactly what we do, right? This is not me going to be happy because we moving and shaking the right way. Don't worry about the body on this guy. I'm not an artist. I'm a self-storage investor, right? So look, what I'm going to do is I'm going to go to the bank still, right? I got the bank. But what I'm going to do is go get the bank's money, right? So I go to bank, right? So y'all already know the plays, right? Key Bank, M&T Bank, all of these banks, y'all already know all those plays. I don't need to go in detail and all of that, right? But let's just say you go get $100,000 in lines of credit. I encourage lines of credit. The reason why I encourage lines of credit is because it acts as cash, where you could literally just transfer it over to your account, or you could write a check, and then your 100,000 will literally turn from credit to cash. You don't got to do all the cool liquidation strategies, right? You can literally just turn it to cash. Right? So now you take $100,000 from that bank instead of giving them your money, and then you go around them. My bad. All right, cool. Right here. So look, you go around that bank, and instead you put it in your life insurance, right? Your IUL. So you're taking that same bank's money, you're going to put it in there. And now when it's time for you to go buy a self-storage, so all you're doing is cutting the bank out. When it's time for you to go buy self-storage, you go and borrow that 70,000 because you could borrow, you can't take the whole 100K out unless you're like 5 to 7 years in, and that's a whole other class. But you're gonna go borrow the 70,000 and go use this as a down payment on your self-storage facility while your money is still making 10% interest as if you never touched it. But this is the cool thing about it. When you borrow against your policy, right? The money is still in there. The $100,000 is still in there as if you never touched it. So you could still qualify for other products because you still technically got the money in this account, because all you're doing is borrowing, like you're borrowing from your policy, but it's a private contract between you and the insurance company. You're really not taking your own money out. You're just going to get money against it. Right? Does that make sense? Does that make sense? If it makes sense, just put "make sense" in the chat. So here you go. Here go the kicker now. So like I just told you, you're going to go borrow against your policy, but the money is still in there growing 10% interest. But now we're going to take it to the next level, right? The next level that we're going to take it to, right? This is the next level. we at? Let me just get back to my screen. Yeah. Cool. Great. All right. Y'all see my screen? Put a one in the chat. Y'all see the PowerPoint.